Hello viewers, in this video I'll be going over S&P 500 ETF ticker symbol SPY. Right now we are up 25 basis points and we touched all-time highs today, and we still have about 3 hours left in trading. On the 1 hour chart we are not even at overbought level, so you could say this trend or move up has more I would say gas to it, so we can definitely see this trend continuing to move up higher. Same thing with the 4 hour chart. The RSI is not overbought yet, but we do start to see the 4 hour MACD is starting to diverge, and that is one thing to look at. For the daily chart, we are also not overbought on the RSI, and the MACD is still healthy. It has not diverged yet. It's still in the uptrend. So as for resistance, the resistance really is going to be the all-time high, and we have not hit that yet. So another method of finding the all-time high is really using the Fibonacci sequence. So one could use this as one. Tracing back to the lows that we made back in December of last year to current all-time highs at the moment. So we have a possibility of, even if we can expand out, well, apparently not. So I'll make a Fibonacci from here to where we took a dip back in May, or towards the end of May, and it looks like from that resistance it made a new point, and that is at the price of $307. So if we were to move on higher and hit that resistance, that is about roughly, I would say, if we can see it, so that, well, that is roughly around 3%, or yeah, roughly around 3% move up. And as for support, if we remove the Fibonacci, the support will be the 18-day moving average. Reason why we start seeing past resistance at the support now, and it coincides with the 18-day moving average, so I'll mark that as support. So if we lose steam or encounter negative news, that price movement is roughly around 1.6% move down. But overall, I do see this uptrend staying intact and touching the 18-day moving average as support. On to the next module, I'll compare today's current trend right here with this trend that dated back to August 29th to November 24th, 2014. I'll point out why these two charts are similar. So what we have here in the beginning of the trend, we started out touching the upper Bollinger Band. We proceeded to go down lower, touching the bottom Bollinger Band here, and once more down here. And then we made a quick reversal in recovering an uptrend. And then we start to see this trend behave similarly right here, touching the upper Bollinger Band in the beginning of the trend right here. And we see it touch the bottom Bollinger Band several times, or twice. One over there and one down here. And then we see the quick reversal into up channel right there. So what we have is 1, 2, 3, 4 points, and 1, 2, 3, 4 points as well. So there's reason to believe that the trends and patterns are the same. The outcome and forecast would also be the same. So let's head to the forecast model. I'll go to day by day where S&P 500 went to back in August 29th, 2014 to November 24th, 2014. So 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So back then, the S&P 500 was only up around 20 basis points, so not much higher than where we are currently are at. So in 7 days, I do expect the S&P 500 to be flat. And here's the line chart I compared it to. Here's the current trend and the 2014 trend overlapping it. And that is all. If you enjoyed this content, feel free to like, subscribe, and comment as well if you have any questions. And thank you for watching.